All right, let's go ahead and get started. Good morning, everyone. I'm Joanne Koontz. I'm here again today with Marina Parkin. We are providing yet another update. I don't want to steal today's thunder. Marina's got quite a bit to talk about in terms of tax. However, we did want to let everybody know that today will be the vote to extend and add additional funding for both PPP and EIDL. So we're looking at almost as much money for PPP as there was in the initial round, and an additional $60 billion being funded toward EIDL, $10 billion of which is earmarked specifically for those emergency grants. So we do have good news coming. In the meantime, before we dive into that, Marina today is going to walk us through some of the special tax provisions and credits and things like that that we need to be aware of. So turn it over to you, Marina.
Thank you. I actually also, before I get started on those payroll tax credits, I wanted to mention about the loans. I spoke to a lot of my clients whose applications are in process, and it looks like the banks are reaching out and gathering in information. So it looks like the banks are still continuing to process the applications as is. So I think that if you are getting a call from the bank to say, okay, your application is ready to be filled out or signed, or please provide this payroll information or whatnot, go ahead and do it. Don't necessarily wait for the decision for, the funds to be given. I think that the bank's job is just to make sure that on their end, the application is moved along, so that when it's time for SBA to give an opportunity to allocate some of those funds, on the bank side or on your side, the application is good to go. I don't know if, Joanne, you're getting the same questions from people on your side too.
Absolutely. And I've seen also banks reaching out to clients via emails that they've shared that have said, we are still processing on our end, although we cannot submit to the SBA. I taught a webinar yesterday with a different provider, and I told everybody there, stop what you're doing tonight. If you don't have your Schedule C, line 31 calculated, if you haven't prepared your figures and your supporting documentation, do that tonight, because the money absolutely will go fast. The SBA lenders that I've spoken to anticipate this round of funding lasting only about a week. So I had one person who replied on the webinar yesterday and said, is it even worth it? Or is all the funds going to go to people that have already been in the queue? And I said, I can't tell you that. What I can tell you is if you don't apply, if you don't get your documentation together now, you will miss out. You can get it together and you still might miss out, but I promise you'll miss out if you don't get your documentation together and be ready to go the second this rolls out. Although it is almost as much funding, people now know more about the program and how to apply and how to calculate their loan amount and what goes into this. And as a result of that, you're going to see better prepared applicants, whereas when the first round of PPP opened, the banks had no idea what to ask for, so people had no idea what to provide. We had little idea as advisors what to tell folks to do. And that, as you see, if you've been watching these webinars, have continued to unfold. The same thing will happen. So far, the first round that passed through the Senate isn't substantially different in terms of the requirements. They did earmark some money for small banks. So I have been telling folks, if you've been stuck at Wells Fargo or Bank of America and you have an opportunity to go to a smaller community bank, you might choose to switch lanes now, because there are funds that are earmarked specifically for those community banks. There was a perception based on the media release of businesses like Ruth's Chris and Shake Shack and big company Harvard, big companies that were in receipt of funds, some of whom gave it back, some of whom didn't. But there's a lot of pressure on the government officials now to say, hey, look, this was supposed to be for Main Street mom and pop, and look, it went to all these big companies. So, it's kind of tough with the division being at 500 employees. A business with 500 employees is drastically different than a business with 5 or 6 employees. And so I think you're going to see a little bit of a division there that is going to make it easier for you to get in line. But you do need to absolutely be prepared. There's going to be no time for you to just start looking at your financials this weekend. You're going to be too late.
Well, and I guess let's do a quick refresher then on what type of information people are submitting. So once again, if you are a company and you have payroll, so if you own the company and you're the owner and you have payroll, you yourself may be on payroll, you may have other people on payroll, the basis for your application is going to be those payroll reports. Okay, so it's going to be the W-2 wages that you pay to your employees and any health benefits and so on. If you are self-employed and you're not on payroll, what you're applying at is as self-employed individual with your Schedule C net income. So it's not going to be your gross commission or gross revenue or gross anything. It's going to be net income, because essentially IRS is, or SBA, and IRS is being the agent here, but SBA is trying to get down to the net income number that is going to be subject to payroll tax. And for a self-employed individual on Schedule C, the piece that's going to be subject to self-employment tax is the net income at the end after all the expenses are deducted. And what they're calling it is the owner compensation replacement, which is essentially like your salary, and that is going to be the basis for your application. Now, let me also, I wasn't planning on talking about it, but this seems to be a fantastic segue to discuss this issue, because I've gotten a lot of questions since we have presented this update from SBA last week from my clients to say, well, if my payroll, if I'm an S Corp shareholder and my payroll is small, because we've always made the payroll be reasonable, because again, as an S Corp shareholder, you don't have to take all of everything out as payroll. You're only taking reasonable payroll so that you're paying payroll tax only on the smaller amount, maybe 25 to 30%, maybe a little bit more. And then people say, well, when I look at that number, the basis for my loan application is very little. So is that really all I'm applying for? Am I only applying for 5,000 or 4,000 or 10,000? Is this it? Can't we increase my salary? Yes, we can. And yes, your basis for the application is small. However, the reasoning behind having a reasonable salary is your annual savings of that payroll tax. So since you've been an S Corp shareholder and have taken only reasonable compensation, you have saved thousands and thousands of dollars every year in payroll tax. So when we're getting to the situation now where this is a one-time PPP application, sure, you may be getting 3,000 less than if your payroll was higher, 2,000 less, depending on what your situation is. This is just, you may be losing out several thousand now, but you have had years, and you will continue to have years of savings of that payroll tax by being an S Corp structure, being an S Corp shareholder owner, being an S Corp shareholder owner employee that's only taking reasonable compensation. So please take this in perspective and look at the big picture and look at the savings you've already realized over the years of doing this, and you will continue to realize once your business is back up and running. But yes, when you're looking at the basis being payroll only, you're on the same footing as everybody else out there who's an employee. So if people are with the salaries and they're paying payroll tax on that, whatever you're paying payroll tax on is going to be the amount that you can apply for as that replacement. And again, this is not going to get you thousands and thousands of dollars so you can keep open. This is really only meant to last 2.5 months. So essentially two months plus. This is not going to be for the next year until the rules change, or if the rules will change. So you're only talking about 2 months worth of payroll. It's not a huge amount. So as one person, and as you hear all of this news out there about people getting thousands and millions of dollars in these PPP loans, these are companies that have multitude of employees. They're trying to keep these people employed for the next 2 months. So please don't be frustrated that your loan amount is small or that you are at the back of the line. You're just on equal footing again with all of the other employees out there and their employers. So I hope that makes sense. Feel free to reach out to me if you guys are my clients, and we've been helping put together those Schedule Cs. If your tax return is in progress with us, it doesn't have to be final. They're just looking for a draft. We can quickly put together a draft of that Schedule C income for you. and you know, if it's payroll based, then you already would have had your payroll reports from your payroll provider. So I think you've got what you need, and we can certainly help guide you through it. But I just wanted to, you know, kind of put it out there to not be as frustrated as some of the comments that we hear from people. So I'd like to, unless there's any other questions about that, I'd like to get a little bit into these payroll credits and payroll tax deferral, if you will. Joanne, anything on your end? I think we're good.
Nope, I'm good.
Okay, wonderful. So while everybody is madly waiting or applying for these PPP loans, I just wanted to remind that there's a couple of other relief provisions out there. One of them is the payroll tax deferral, and the other one is the employee payroll tax retention credit. So what does that mean? So for payroll tax deferral, IRS is giving you an opportunity to defer paying as the employer's portion of Social Security tax for over the next 2 years. So this would be the tax that would, any payroll tax, Social Security portion, that would be due anytime between March 27th through the end of this year. So essentially first quarter all the way until the end of the year. Any of the payroll employer portion of the payroll tax that is owed right now can be deferred and paid over the next 2 years, with half of the payment being due in 2021 and the other half of the payment being due in 2022. And this is by the end of the year. So half of the 2020 payroll tax would be due at the end of 21 and the other half at the end of 22. This is a huge deal because as you continue to pay your people, they're trying to get your relief from not having to pay these payroll tax credits in addition to salary. So as many people are applying for PPP loans and are saying, okay, well, can I get the relief for, you know, not having to pay, or can I defer, can I still defer my payroll tax credit? What IRS came out last week and said, yes, you can, until you get a decision that your PPP loan is forgiven. So essentially, when you get that PPP loan and it's for 8 weeks, at the end of 8 weeks, it's going to be determined if you get it forgiven or not. Up until that time, they're telling you, you don't have to pay your employer portion of Social Security tax. You can defer it. Once you have a decision that your loan is forgiven, then you have to stop deferring payroll tax on the amount of the loan that you got, essentially that was used for payroll. So it seems a little bit funky because I understand while you're in limbo waiting for the loan, and then once you get the loan for payroll, you can't defer. But what IRS has said is even once you get the loan and you're continuing to use the loan proceeds to pay your employees, you can still defer the tax until the decision that the loan is forgiven. So that still gives you that relief. What IRS has not yet done is to tell you exactly how to do it. So is there going to be a form? Is there going to be a letter? Is there going to be how exactly that's being done? They didn't say. What they did say is that they're going to make it easier. I'm going to read you what it says. It says employers will not be required to make a special election to defer deposits and payments of these employment taxes. So that means they're going to try to make it really, really easy. So I am going to be looking for more guidance about the actual technical part of it. I know that we do not do payroll in-house, but many of you are with ADP paychecks. Many of you have bookkeepers processing your payroll. I think those companies are going to be at the forefront of figuring out exactly how it technically works. So please be in touch with your ADP or your paycheck provider or so on. But my job is to kind of keep on top of it to make sure to let you guys know that this will be available. Also, if you don't get the PPP loan, if you're not eligible for the loan, or if you choose not to apply for the loan, you don't even have to worry. This payroll tax deferral is available to you. So again, this is the employer portion of the Social Security tax. You can defer that over the next 2 years and pay 50% with in 2021 and 50% in 2022. There's going to be some, I think ADP is putting together a webinar we'll be attending tomorrow So hopefully next week I will bring some more detail. But this is definitely available. So again, just like anything else, the devil is in the details. These rules are fantastic. It's supposed to give great relief to, you know, the employers out there. This also applies for the self-employed individual who is paying payroll tax. And again, it's going to be the employer's portion of that tax that can be deferred, but the detail on exactly how to ask that for that deferral, and should you wait for the PPP loan to be forgiven, even though they're telling you, yes, you can still defer the tax that's due in between, you know, up until the forgiveness decision. Exactly how you do it, it's still a question. So I think my job there is to raise a hand and let you know that's available, and to talk to your payroll provider. The other thing that I wanted to touch on is the employee retention tax credit. So in addition to the deferral, there's also a credit that's available. That credit is based on 50% of an employee's wage up to $10,000 of their wages. So essentially you can take up to $5,000 of credit if you continue to pay your employees while you're either partially open or fully open, but your revenues are down by more than 50% compared to this time last year. Okay, so like, let's say a restaurant who is still creating a takeout service, and they're still open and they still have some people working, but their revenues are down, you know, 40, 50, 60%. If your revenue is down 50% compared to the same quarter last year, you can take this employee retention credit, again, up to $5,000 per employee. And that credit goes against the payroll tax on that employee's salary. Now, IRS has made very clear that that credit is not available when you have the PPP funds. So they do not want you to double dip. So in this particular case, as opposed to the tax deferral that you can keep deferring tax until you get the loan forgiveness, in this case, you should not take the employee retention tax credit even while you're in the application stages of waiting for the PPP loan. Because if you are taking this credit, you may get your loan kicked out. So you may not even be able to get the loan if you've already taken those employee retention tax credit. So please do not take the credits while you're in the process of applying for the PPP loan, waiting on the PPP loan, or actually got the funds and are paying your salary. What I'm telling my clients now is once you get your loan, the loan runs out 8 weeks, you get the loan forgiven, you are still struggling, your revenues are still more than 50% down from last year, you're still continuing to pay. That would be the time that we will start looking at that relief to take those payroll tax credits. Okay, so again, the detail on how that credit is going to be calculated is still coming. IRS already said that's not going to be available for the first quarter. I don't think they're ready to really calculate it. The first quarter payroll taxes are due now. You know, it's the first quarter ended March 31st. So all of the payroll taxes and payroll reports are being filed right now. They said that whatever credit you may have been entitled to in the first quarter, you will get in the second quarter. So now I guess it's your job. Really, most of the people are in the PPP loan application anyway. So once we settle in with, you may not get the PPP loan, you still continue to pay your people, you still continue to incur payroll tax. When we get to the end of second quarter, you will know if you're not getting the PPP loan. You will know if you've paid your people, how much payroll tax you should have been paying. That's when you can ask for that credit. And again, I'll bring you some detail. I will talk to the ADP guys. You talk to your payroll provider. But that's something that's going to be available from the way that I understand closer to the end of the second quarter. Okay, so please make sure you don't apply for that now. The nice thing with that employee retention tax credit is that it can be refundable. So if you, because again, you can take, 50% of your employee's salary up to $5,000 against your credit. So you may have an actual payroll tax be smaller than this tax credit that you can calculate. if there's a refundable portion, there's going to be a form too that you can fill out to get that refund faster, as opposed to waiting till tax return time next year. And there's a brand new form coming for that as well. So just FYI, I wanted to kind of bring those to the deferral and the retention to kind of to the forefront a little bit, as people are starting to hear it. And we'll bring you more as we know more detail. That's I guess is the name of the game here.
Absolutely. Absolutely. Thank
Yep.
you. Thank you
Yep.
for that. I've had a lot of questions come up with the overlap of everything with PPP, from these tax credits to unemployment to idle. So, you know, it's definitely going to be the thing you want to work around. So it's most important that we preserve your debt forgiveness component of PPP. And that, keep in mind, we've only had about 2 paragraphs of guidance. Last week when the SBA dropped some FAQs, we got about 29 pages or so of FAQs last time, and there was only like 2 paragraphs that were allocated to debt forgiveness. And it basically was relevant to saying for an operating company with folks on a payroll, it basically told us that we needed the payroll reports and the stuff we knew already. We're still waiting for further guidance, particularly for independent contractors and self-employeds, on what that's going to look like. So we haven't forgotten, but keep in mind that they're still trying to get funds in people's hands. Once this goes through, the vote is today for them to approve, for the House to approve the addition of the extension of the PPP funds. And then after that, we'll start to see some guidance come in on debt forgiveness, and we'll continue to keep you posted about that. And we'll be doing webinars on exactly what to provide. I've had a lot of folks ask, Marina, speaking of that, before we transition out, about opening a separate bank account to house their PPP funds in.
Yes.
Do you feel strongly about that?
You know, yes and no. I think if you do have a separate account where those funds will go, and then you will use those funds to make your payments, your payroll payment, it certainly is going to make it easier to track the payments. However, on the flip side, what my concern is, a lot of the payroll payments are on auto pay with many folks. And the payroll company, let's say ADP, is going to withdraw the money from the account that they already have it goes via EFTPS and they make the transfer. The EFTPS account is already tied to your normal operating account. So putting the funds in a separate account, although is great, I think it's going to be very difficult to make any transition, especially for only 8-week period. So I don't know that I feel strongly about maybe opening a separate account, but what I would most certainly keep track of is a good, detailed ledger of the activities for those 8 weeks, and make sure that you are documenting what payroll went. You've got those transfers out to payroll, you've got the transfers out for your rent, you've got transfers out for the mortgage interest, and so on. So I think that ledger, if you will, the GL in your bookkeeping software, or even the banking activity, is going to be more key than having it in a separate account. I don't know if you had any other thoughts or if anybody else, gave you any other ideas. I was just more concerned with just the payroll transfer being automatic. Since Joanne is on mute, I'd like to touch on an IRA question. So in reading, I guess, a little bit more on some of these IRA provisions. So when we looked at the basic rules, weeks ago, and we know that if you have an IRA account, you can take up to $100,000 in distribution from your IRA. If you're taking it as an early distribution before turning 59 and a half, that would normally be subject to 10% early withdrawal penalty. That is going to be, there's going to be no penalty on that IRA taken out. And if you're over 59 and a half and you take the distribution, if you feel like you need it, if you feel like you don't need it, you can recontribute it back. and you actually have 3 years in which you recontribute that IRA back. So the 3 years, so a couple of clarification as I've been reading and doing some webinars on this subject too. So when you have 3 years to recontribute back that $100,000 to your IRA, 2020 is year 1. So by the end of the year will be the first year that you can recontribute it back. So 2021 is year 2 and 2022 is year 3. So you have to recontribute whatever you took out as IRA. Again, if you don't want to tax, you have to recontribute it back by the end of 2022. So that's key, because people have been asking, is 2021 going to be year 1? No, this is going to be your year 1 for recontributing. If you do not recontribute, you actually kept that money and used it, then you can elect to have it taxed over 3 years, with 2020 again being year 1. So you can elect to have some of it taxed this year, some of it taxed next year, some of it taxed the following year. I can see folks that are truly going to be in the hardship situation. They're not going to, of course, they're going to have to elect not to have it taxed this year. Again, detail-wise, I'm not sure what it's going to look like, if there's a box on the form or whatever else on your IRA when you're going to get that distribution reported to you for this year. But certainly you have 3 years, with 2020 being year 1, that you need to either pay tax on it or recontribute it back. Couple of questions that have come up with this. Normally, when you take out an IRA, you have up to 60 days under normal circumstances to recontribute it back. If it's a normal IRA withdrawal, that is correct. You can either roll it into another IRA account or contribute it back to the existing account, and you have only 60 days to do it. So you cannot have money from more than 60 days in your hands. When it comes to these hardship COVID-19 distributions, the 3-year now replaces the 60-day rule. Okay, so the 60-day rule goes out the window if it's a hardship distribution, and that wording is read to say 3 years. Okay, however, if the distribution is not a hardship distribution, you're still subject to the 60-day rule to put it back. In order for you to say it's a hardship distribution, you either there's a couple of different requirements. You have to be either sick or be on forced quarantine. You have to have a family member who's sick or be on forced quarantine, or you have to experience certain hardships. IRS has not yet issued guidance exactly on what they're going to look for when they're looking at hardship. Of course, if you lost your job, your business income is down and things like that, that is all easy. However, if you're facing uncertainty, but your income really hasn't changed, your business really hasn't changed, maybe you went down, but not dramatically, that is not going to get you that hardship excuse. So taking money out of the IRA should not be the first thing you do. It should really be the last thing you do when you're truly experiencing hardship, if you want to get that relief. Because if you're taking money out and you don't have a leg to stand on to say that this truly was a hardship distribution, you cannot now wait 3 years to put it back and actually use it to maybe start a new business or renovate your house or whatever else. You are still going to be subject to that 60-day put back rule. And if you don't put that IRA back in 60 days, as just your regular IRA rollover back in 60 days, you're going to be subject to tax on this distribution. And if you're younger than 59 and a half, it's going to be early withdrawal penalty of 10%. So you got to be really, really careful. Of course, a lot of the financial advisors, they're really, really advising against it because, IRAs, this is the nest egg that you're building. And, by taking it out, you're, messing up, of course, the growth. So this is not, it's nice to have that money in there. This is an emergency time, but please truly make sure that it is an emergency time for you to take out that IRA. If it's not an emergency and you can do other things like getting the loans, getting line of credits, borrowing, or so on, please utilize that before you get into the IRA. Because I think a lot of people are going to get caught in that hardship, not being able to fully prove that you had the hardship under this. A lot of people are freaking out, but they actually haven't lost income or as much of the income. So before you get into that and say, oh yeah, I can take $100,000 from my IRA, I'll put it back in 3 years. and this is why the financial advisors say most of the people, once you take it back, you're not putting it back. So, then it's like, oh, I got this extra money in there. So really, please try not to, utilize that as your first kind of line of defense against needing some extra cash. But that relief is available if truly you're experiencing hardship. So that's one of the things I wanted to mention.
Can I jump in before you move on?
Yeah, of course. Yeah, go
ahead. The other thing I want to say as the resident lawyer here, those IRA funds are absolutely creditor protected as well. So although Marina said it should be your last stop and your last resort, before you exercise that, you really need to have a serious conversation with yourself and with your financial advisor, with your accountant, with your attorney, and see if this business is going to survive. Because what you don't want to do is throw the baby out with the bathwater and exhaust the IRA funds, which were otherwise protected, and then ultimately still face a bankruptcy or financial distress, where at least you would have those IRA funds to rebuild your life or rebuild your business. If you put them as the last thing that goes down with the business, now you're starting over from scratch and you've exhausted those funds unnecessarily. No one can take those IRA funds from you, apart from the IRS, for tax due, but creditors cannot touch those IRA funds. So that is absolutely IRAs, 401ks, any of those creditor protected class investments. You want to be very certain that that is a good plan to liquidate those accounts, even far beyond the tax and the benefits with respect to the deferrals.
Absolutely. This is key. This is an absolute key. You're losing a lot more than you're gaining by taking those IRA funds. Yeah. And we see this a lot with folks that take their 401k money to start a new business, and there's all sorts of programs out there. And to be honest with you, we've seen it fail more than we've seen it succeed, where people do take that creditor protected 401k, they fund the business, or, it's their money, and then they don't have anything like that now to fall back on. So please be very, very mindful about that. One other technical thing that I wanted to outline there, a lot of people that have been emailing me about this have been asking, because there's a rule that when you take the funds out and you have that 60-day rollover, which now you can read as 3 years if it's hardship, you normally, under normal circumstances, you can only do one put back in 12 months. And people are asking, well, if I take the 100,000, or if I take multiple distributions, can I put them back? And the answer is yes. If they are the hardship distributions, you can take more than one a year and do more than one put back. So just know that's how those rules read now.
Are you expecting an additional code to be available when you look at the 1099-R for those distributions, and it's there's certain codes that indicate why you're distributing? Or have you seen any talk about adding a hardship distribution code?
I have not. And from the history of preparing tax returns for a while, because there's always a hardship clause in there already, right, for taking IRA. Sometimes the custodian who gives you 1099-R will put something in there, but most of the time it is up to you, the taxpayer, to tell your preparer that this was hardship. And then on the tax return, there's a form that we need to fill out to indicate that it was. So there's some codes on the input screen for us. But if it's not indicated on 1099-R, and if you don't tell us, we do not know that this was a hardship. We're reading it as a normal distribution or early distribution, or however they code it. So please be mindful when you're providing your documents, if this was your case, that you tell your tax preparer that this was a hardship distribution in case there's no other way for it to be indicated. Mm-hmm. The last thing that I really wanted to talk about IRA, and it's kind of hard to talk about it now that a lot of people are in distress and waiting for funds and so on, but some of these IRA rules now present a fantastic opportunity for those folks that want to do a Roth conversion. So what is a Roth conversion? You take your IRA account and you convert it to Roth. Roth IRA is not taxable when it comes out, and it actually grows tax-free. What does that mean? When when you take distributions from Roth, ultimately when you retire, you're not going to have to pay tax on the distributions. And when those distributions include the growth on the actual amount that you contributed, that is also tax-free. A lot of times folks that have traditional IRA accounts, which are taxable when you distribute, want to manage their tax impact, and they want to say, if I don't want to have to pay tax on it, how can I convert this to a tax-free distribution? Well, you convert the traditional IRA to Roth IRA in any year where you may have a low income, because the conversion is going to be a taxable event. Once you convert your traditional IRA to Roth, then the Roth is going to be tax-free to you, but that conversion is a taxable event. Why 2020 presents such a good year to do that conversion is a couple of things. Number one, a lot of people may have lower income. They may be themselves in a normal cash situation, but they may be investments in businesses. Those businesses may not be passing so much income through on the K-1, and so on. You may also be in a situation where you are receiving RMDs that typically push up your income. However, in 2020, you do not have to take RMDs, which is your required minimum distribution. So you can skip those. So that's another way you can manage your income being low. So this year presents a good opportunity to minimize your income from other sources. Take your IRA account and convert it to Roth. The other reason why this year is such a good opportunity is because the values in your IRA account right now may be lower because of the current market conditions. Instead of freaking out about that and liquidating all your accounts and putting your cash under the mattress, take advantage of that and convert the IRA to Roth, because your conversion amount is going to be lower than it normally would be in normal circumstances. So A, you're managing your income by not taking RMDs and minimizing other sources of income, and B, you're converting it at the low value. Once you convert that traditional IRA to Roth, that Roth now will always be tax-free to you, and it's growing tax-free. So this is a fantastic opportunity for those folks out there, whether our clients or somebody else, who are in the RMD land and who want to be able to minimize that and want to set up some tax-free retirement income going forward. I talked to a lot of the financial advisors that we work with on mutual clients, and everybody seems to be in that idea. So if you hadn't talked to your financial advisor yet, please do. If you don't have a financial advisor, you have IRAs that you're kind of looking after yourself. If it's with the company that nobody ever talks to you, that's definitely something to keep in mind, that this Roth conversion is a fantastic opportunity in 2020 because of the lower tax that you may be paying on it. So
is there a particular time frame? Is there a particular time frame that they need to act on that?
Before the end of the year.
Okay.
And if you've already taken your RMDs, you can put them back as well this year. So the RMDs, again, for people who are taking RMDs, a lot of times it's required to be taken at, sometimes it's set to go April 1st, sometimes it's December 31st. A lot of times if you're in the RMD regular distribution time frame, it just hits your account January 1st. If you already got those and you feel like you need to do a little bit more shifting, you can put that RMD back now as well. So definitely talk to the financial advisor. I just advised one client, and we talked with a financial advisor. He's stopping all of his RMDs and converting up to probably about 100,000 of his IRA into Roth, paying only maybe 10% tax on that. And wow, he's going to have tax-free income, tax-free growth for the rest of his retirement years.
That's amazing.
Yeah.
It's very important not to be short-sighted here and hide under the bed and freak out when these opportunities are real, and it's a big way to recover. So a lot of people, like you said, are very anxious and very distraught about the loss in value of their portfolios. But that stuff will come back. I mean, you saw when this first happened, Disney stock plummeted, and you can't, that there's obviously going to be long-term impacts for Disney, but you got to think about across all of the stocks, combined through all the markets and all the indexes that are available. that's not going to be forever. And just like we came out of 2008, which no one thought was going to happen, it will be back, and you'll be very glad that you were studying and proactive during this time rather than hiding under the bed.
Absolutely. And, you know, part of what we're going to do, guys, is going to be, of course, we'll bring you the updates on the rules and everything, but part of it is we're keeping our eyes open on all of these planning opportunities as well. You know, even when it comes to the financial stuff, I'm sure those with the financial advisors have already been looking in their accounts to say, can we harvest some losses? What can we do? There's going to be some planning around the net operating loss, as I told you, that with the carryback. There's going to be some opportunities to maybe push some of those losses into the 2020 year, or maybe even 2019 if your taxes are not done, to see if we can do those carrybacks and get you some tax back. So we'll be bringing you those ideas as we learn more about them and as we see them working. And, you know, we don't want to kind of throw a lot of things at you at this time, just because, again, right now it's kind of survival mode. Everybody's trying to keep their business running. Everybody's trying to keep their job going. But definitely there's going to be some good tax saving opportunities. And there's going to be some, you know, business, personal, you name it. So we'll keep bringing that stuff out to you guys.
Thank you. Thank you. You know, I don't see any questions so far in the Q&A on the IRA or the tax credit deferral. If you guys do have questions, you're welcome to put them in the Q&A and we'll take care of answering those. But that's, you know, this is the part that's not fun or necessarily easy to understand. People were starting to get a handle on PPP. So that's, the tax side is definitely something we have to be mindful of. We do have a question, Marina, though, on the carry forward, carry back tax does that apply to foreign tax credits, or how is that working?
Yeah, there's a foreign tax credit that's going to get updated as well. I think there's some updates on it to see if that can also be carried back. So I will keep my eye out and I will bring that forward as well, because the foreign tax credits have always had a carry forward, but the issue with foreign tax credit is the carry forward life is only 10 years. So I'm not sure if they're going to change the carry forward life or give you the ability to carry some of those back, because after 10 years they're dead and useless essentially. So I will bring up some of the foreign tax credit stuff, because I've seen it come through in some of the articles that are popping in my email. So I'll be paying attention. One bite of tax food at a time. It's definitely been overwhelming on our end, as you can imagine.
And you know, that's another point for you, for the audience. If you're feeling overwhelmed, don't be disheartened. Don't be discouraged. We have felt overwhelmed, and this is our language that we speak on the daily. So don't think it's you. These issues are just extensive, and they're crossing all aspects at once. So customarily in the past, when we've had an issue, whether it be weather related or industry related, in 2008 it was the mortgage crisis and financial crisis, but not every sector was affected. Certainly not every state, certainly not every country. So nobody's experienced anything like this ever, even as bad as we've had it in the US. Even the Great Depression was not everywhere, just, you know, so you have to think about how massive this is, and just, you know, be easy on yourself and be gentle when you are feeling frustrated. I had to speak to somebody yesterday, and I was like, whether it's personal or professional, keep in mind that everybody in your house, everybody in your business, every one of your clients, every one of your vendors, everyone is under stress. And it's, you know, we're kind of all in this together. I did see a thing, the airline said we're all in this together, and someone said, yeah, but not when my suitcase is 51.5 pounds. So we were not all in it together then, but you know, it is refreshing to see how employers have stood up for employees and stuck their neck out financially to keep people employed and to keep people with as much pay as they can do, even while they're waiting on PPP, and vice versa. We've seen lots of heartwarming stories where employees have said, you know what, I'm going to continue to work for you, even though I know you can't pay me, because I want a job to come back to, because you've been so good to me over the years. And that really is pretty cool. And if there is a silver lining to this, you will see loyalty on both employer and employee sides, and between vendors and suppliers, and relationships in all directions will have some benefit from having everyone endured this together. So we'll continue to keep bringing not only the tax information, but as we've mentioned, the PPP extension is supposed to pass today, fingers crossed. As soon as we have the guidance, as soon as we have the rules, you're going to want to pop back on and we'll provide that. One thing, do you have any more on tax, or can I?
No, I think that's it.
One thing I want to say about PPP, I mentioned earlier, if you haven't gotten your documentation together, do it tonight. If you have already applied, I've gotten this question from several folks. If you've already submitted an application, should you run and submit elsewhere? That really depends on what kind of correspondence you've received from your lender. So for example, we have some folks that were applying through Chase. Chase has a 4-step process that they've been communicative about. And if you've submitted everything to the bank and they've looked at it, then they've said, hey, all we're waiting on is SBA to look at you. If you're in that kind of frame from your lender, I would not go elsewhere. If you were in a queue that said, hey, submit your information here and we'll get to you when we get to you, then yes, you are definitely going to want to go somewhere else. Preferably somewhere else you have a banking relationship. But even if you don't have a banking relationship, when we first started doing these webinars, I was emailing a local lender's contact information. They've definitely gotten overwhelmed. But a few other lenders have opened up. We've seen Sable Palm Bank be willing to process applications for folks who did not have an existing business relationship previously. Also, Achieva Federal Credit Union. Don't overlook these small banks. I think that in the beginning, people said, well, Bank of America, Chase, Wells, they have all the assets, they have all the people, they have all the technology. Let's run there first. And that isn't necessarily true or false. But some people had an excellent experience with Bank of America and the portal that they used, and some people were met with extreme frustrations. But there is, as I mentioned earlier, a carve out for small and community banks. So you may want to consider making an application with one of those banks that's willing to accept new applicants. However, you really, before you run, need to understand where you are in your current application process. If you don't understand that, try to reach out to someone at the local bank level. I know that's tough for them to answer the phone. I know they're getting flooded with correspondence and emails. But if you can do anything to get any status update from your existing bank, keep that in mind. Also, let me reiterate, because this question continues to come up. Some folks have gotten frustrated with their banks and said, can I just go to SBA directly? You cannot. You must use an SBA approved lender. For the EIDL loan, you can go directly to the SBA website. The second that gets funded, we expect the link to the SBA EIDL application to be functioning again. Right now, if you click on it, it says the funds have been exhausted and they're not accepting any applications. As soon as this passes and the EIDL program has $60 additional billion, that link should be the same link and it should be viable again. So if you have experiences, if you see, it is extremely helpful for you to forward us. We've gotten lots of people who've been generous with their time to hit forward and say, hey, just so you can see, this is what my bank email sent. Just so you can see, this is what happened. One gentleman reached out to me last week and said, hey, unexpectedly, I was doing something online and I saw that PayPal was processing PPP applications. He said he submitted with them. He had a very positive experience. They didn't ask for bank statements. So keep in mind that that is extremely helpful when you share with us so that we can continue to share with the folks that we are talking to.
And I think the Intuit is doing it as well. If you have
Yes.
payroll that Intuit does for you, they sent, I've gotten several emails to say that Intuit has been doing them. So that's pretty cool as well, I think.
Yeah, be open-minded that it doesn't necessarily have to be the bank down the street that you were thinking of. Now, Renee has asked, if you've received the $1,000 grant from EIDL, do you need to reapply for the balance of the $10,000? Unless they change that, it doesn't look like there's going to be any additional funds available under that grant. So my inclination at this point, Renee, would be to say no. But until we get the final rules, we don't know. There was discussion about some of the funds being earmarked for women and minority-owned businesses. They definitely put some earmarks in for small businesses, for employees less than 25. So we'll just, that's hard to answer until we get the guidance, which we're expecting hopefully tonight. We may not get to sleep tonight. Don't look tomorrow. We'll be on just the video.
Yeah, no Zooming tomorrow.
No nice shirts. No, there's no hiding that
no hair.
that you're in yoga pants. But once we get that guidance, we will absolutely be dropping that on you. So be prepared for, be on the lookout for a pop-up webinar. If we can get this information to you sooner than next Tuesday, we'd really like to do that.
Question, Joanne, have you gotten any more ideas on going back and fixing an application if you realized you made an error, or what do you do there? Any more insight there? I haven't really heard anything.
I haven't had anybody come back to me and say they had an opportunity to change. In fact, I spoke with someone this morning just before this call, and what she indicated to me was she had applied through Fifth Third. She actually had applied early and had included some 1099 contractor income as part of her payroll calculation. So we were talking about how to sort that, but she never was afforded an opportunity. There's some number through SBA that's like an e-fin number that is an electronic number indicating you're in the queue at SBA. And she had that number and then got her money in her bank account and then got notice from the bank that said, hey, you are approved. So to suggest to you that this is an imperfect process is perfect. That's exactly what it is. But so she's got some money in there where she may either need to make some adjustments on payroll, temporary increases for folks who have been critical employees during the process. You may have had a person who's really stepped up to the plate and you want to show them some love. You might want to consider some of those alternate payment arrangements and be very clear so that there's no frustration on behalf of the employees or disappointment if you do provide a temporary increase and then after this program ceases, that then they are restored to their regular pay. It's a nice way to say thank you for stepping up and for having our back to your employees while you were undergoing this kind of trying time. It's interesting. It's really been unbelievable to see that the banks have just processed these applications and not really done a lot of due diligence on the applications that they've received. On the other hand, but now's not the time to shake people down. They really were. I know I've said this before, and I know that people are frustrated when they don't have the assistance that they're looking for, but they really, it wasn't perfect, but I do think there was genuine, sincere effort and desire to get people help quickly. So people may find that not 100% of that loan will be forgivable and they do have to either pay some money back or give some funds back or make some adjustments because the initial round of applications clearly had some inaccuracies, not because anybody was trying to be, sly, but just the rules were not clear and guidance was issued subsequently and the rules were changed in the middle of the game. SBA was still writing some of the rules and even the lenders didn't know what to tell you. So that's that short answer, long answer to short question. No, I still don't see any way to revise the application for PPP. Okay. If you haven't submitted, please, I can't encourage you enough to get your documentation together so that you can do so. I don't know that there is a way to check on status of EIDL applications. There's certainly not an automated way to check on the status of PPP applications. All you can do is try to get to a person at your bank for PPP. With EIDL, I haven't had anybody other than receiving a week ago last Monday, the email that said, hey, it's $1,000 per employee now instead of $10,000 for the emergency grant. I haven't had anybody receive any communication that's been shared with me with respect to EIDL, approval, processing, distribution, anything. So the only communication I've seen from SBA has been, hey, it's now $1,000 per employee. And that's all I've seen.
Yep.
Okay. Perfect. Well, we're coming up on time. I want to be respectful to everybody's need to get back to their day. Thank you so much for joining us. As always, our webinars are recorded, distributed to you by email, available on our YouTube and Facebook pages, and on our websites, KoontZassociates.com and KoontzParkin.com. There's a nice big COVID-19 resources button that you can check. Keep an eye out for our pop-up webinar as soon as the PPP and EIDL funds are replenished. And if we don't see you before then, we'll see you next Tuesday.
Thank you, guys.
Thanks, everybody.